Hey, and welcome back. Only 2 days left of 2010. Market internals look actually extremely quiet today. The major indices are only off about 0.2%. They're actually, even the Dow and the S&P have come up even from that level. There's really not a ton going on in the internals except for gold. Looks like gold's trading down today. Both the GDXJ and BVN are down over a percent. Actually, the GDXJ has come back a little bit. BVN is still down. It's down over 2%. So gold is trading down today. The markets are really not doing much of anything, which is great. They always say do not sell a quiet market. And so far, we really haven't. Okay. Deckers once again sold off at the open today. It's actually positive now. We did add to our position, our short 80, 75 put spreads in January that were short. Starting next Monday, right? So there's one more day tomorrow of 2010. Starting Monday, there's only 15 trading days left before options expiration, and one of those days is Monday, and then the second of those is the day of options expiration. So there's really only 13 trading days in between Monday and OPEX, which is fantastic. That means theta. That's the amount that your option price decays for every day closer you get to expiration. Theta is going to really start to kick in, and as an option seller, that means that puts us closer to our goal of zero, which is what we hope all of the options that we sold are worth at expiration. Okay, we were forced to move our covered calls on Mosaic from the 75 strike to the 80 strike yesterday. We're short 80 calls in January against our long position in Mosaic. Mosaic has just been absolutely monster. We are firm believers in the ag trade, and we also have a position in the Andersons, symbol ANDE. Andersons trades with a PE of 12.97 on trailing earnings, and a forward PE is only 10.87. For us, as you know, that's extremely compelling valuation. The PEG ratio is less than 1, and you know we love that. The issue with the company, though, has been negative cash flow and a levered balance sheet. It does have quarterly revenue growth year over year of 17% and earnings growth of 11.5%. So as long as that trend continues, couple that with the higher grain prices that we're seeing right now, that should extend into next year, and we should see the Andersons pull themselves out of that levered balance sheet or that cash flow hole that they have right now. So that's the negative against the story. Valuation is the positive against the story, and of course, it's part of what is very much so an ag bull market right now. So we do like the name. It's extremely compelling. It pays a small dividend, so you can afford to sit around and wait on it for a while. But we do like that name. It's really, if you can get it down another dollar, okay, it's spiked up big and it has moved a considerable distance above its trend line. So we think that there's a chance that it could trade down another dollar to resume back on that trend line. So be aware of that. If you buy some now, expect to add to the position down another dollar from here. There's not a huge danger in getting in here. It's the stock's down above 1% today. So you can initiate a position here, then wait for a pullback. If not, you could have to add into strength. Okay, so we do like ANDE. Another stock that we've been on that's really done nothing for a long time until today, FIRE, symbol FIRE. It's up to 26.40 or so after trading around 24 and change for about 6 days. The stock consolidated, really nice consolidation for about 6 days, and then broke out to the upside. We think the stock is clear till about 28, where it should hit overhead resistance. The stock traded around 28 for again about another week from the end of November to the first week of December. So that's your next level of resistance. If it breaks and holds above 28, you should be clear back up to the $31, $32 level in FIRE. Okay, we're both short put spreads and long stock in this name. So whenever the stock trades back down to around that 24 level, we sell the put spreads against it. And then we're perfectly fine holding the stock long till it gets up into the 30s, at which point, just like high soft HSFT, we will look to take it off. So far so good. The stock is traded extremely well on the technicals, and we like both high soft and FIRE. Just a quick check. High soft is still holding that $30 level. We did reduce our position in the name, but we do like the name. Certainly a break back under 30, we will be a buyer again of high soft HSFT. Right now we're on the way out of the position now, so disclosure there. $30 level we like to sell. $24, $26 level for high, soft, and fire. We're accumulating. Okay, that does it for us today. Hopefully the market stays this way. Again, they say never sell a quiet market. So far we haven't, except we have done two things. Losers, laggards that we really don't need to own anymore, we've cut them from the portfolio. It's year end. We're getting ready to do performance numbers coming up pretty soon. We've had a good year, but with no catalyst in 2011, there's really no need to continue to hold on to losers. Cisco was a position that was a loser for us this year in 2010, probably our worst trade of 2010, and we have said so long to Cisco, which Jim Cramer likes to call Crisco now because it's just a terrible stock. You know what? If it rallies from here, don't care. Somebody else can have it, but we have no edge in Cisco, and so there's no reason to own names like Cisco that have really done nothing. We do own Microsoft, which has been the other underperformer laggard, but there's actually a catalyst. The new Xbox release has been monster for them. They're sitting on a ridiculous amount of cash. They pay a dividend, and there's some reasons to own Cisco. Plus, there's some positive price momentum heading into year's end, so we're going to continue to hold Microsoft. We'll give it another year and see what happens. We'll get those numbers out when they're available. Don't forget to put on some hedges. You've got to spend some of the gains that you've had to put on some hedges to make sure that if we see some kind of nasty sell-off, that you can profit from it. We like the long 125, 120 put spreads on the SPY, and we like the VIX 1821 call spreads, both for February. All right, thanks for joining us again today. Have a great day. We'll see you tomorrow.